Hi guys. So this is a video on trading mindset, particularly on the mindset of a trader versus a job mindset. And recently, when I posted this video of the reality of being a full-time trader, I put out some statistics on what full-time traders can expect in terms of realistic returns. So I noted that during choppy markets and bear markets, it is common for traders to have 5 to 10% drawdowns in their accounts. And during late stage bull markets, they might make 20 to 30% returns. And during new bull markets, they can expect 100% plus returns. So one of the interesting questions that I got below this video was by Vishal Verma, which actually inspired me to make this video. Now he asks, I want to ask you, is it possible to gain 50% plus yearly CAGR every year in any market? I mean, if someone puts so much hard work, then is it possible? And this is a common question that a lot of traders have, and I get a lot, which is that, but what if I put in the effort? If I'm willing to work really hard, can I get good returns in any market? And sadly, the question is no. Let me explain to you what the difference between a trading mindset and a job mindset is and why this is not realistic. So we can have two types of markets, a bear market and a bull market. Now, in a bear market, breakouts will just not work. So if you are a breakout trader, then no matter how hard you work, you're not going to make returns on most breakouts. And in fact, this leads to the fallacy of overtrading. As a breakout trader, you just think, why am I not making the returns in a bear market? Maybe if I work harder, the returns will come. And what you end up doing is just overtrading. You take breakouts even when the conditions are not right, and you in fact end up losing more money. So this is a very dangerous mindset to have, that if I work harder, I will make the money, because what you're going to end up doing is overtrade. And honestly, even if you do nothing in a bear market as a breakout trader, and don't even show up in front of your screens, you might save yourself more money than someone who thinks that working hard will make them more money in a bear market and is just trying breakouts blindly every single day. Now, in a bull market, on the other hand, breakouts are working. It's a really good market condition, right? So even if you put in a little effort and you have no knowledge, it will pay big. And think about 2020. This is exactly what happened, right? People with no knowledge who just had a Robinhood trading account, like Uber drivers and delivery people. And in no way am I putting them down. All I'm saying is people who have no experience or knowledge of trading with very little effort were able to put on trades and make big money. In fact, I clearly remember one ride that I took from New York to Brooklyn in an Uber where the driver, during the ride, was trading and making money. That's how easy it is. So it's not about the effort, it's about the market condition. And to think that the same amount of effort is going to give you consistent returns, 50%, 100% plus in any market condition, is a huge fallacy. Now, this is the biggest difference that you need to understand between a trading mindset and a job mindset. Your effort is not proportional to results. In a job mindset, you know that if you do 1 hour of work, you're going to be paid $25. If you do 8 hours of work, you're going to be paid $25 into 8 hours. But in trading, you could end up doing 8 hours of work in the day and still be down for the day. If you make mistakes and try breakouts when the environment is not right, say in a bear market, you could be sitting in front of your screen for 8 hours and work really, really hard, but you're still going to end up losing money. You're not going to be paid for each of those 8 hours of work. Think of it this way, for those of you who are visual and statistical. This is a job mindset, where this is my effort and this is the money I make. The more effort I put in, the more money I make. Very simple correlation, very simple mindset. But this is a trader's mindset. Effort has no correlation with the amount of money I make. I could put in a lot of effort and make no money. I could put in no effort or very little effort and make a lot of money. So this might make you wonder, why should I work hard at all? What is the point of working hard if I'm a trader if there is no correlation between my hard work and my returns? Let me tell you what happens if you don't work hard as a trader. You won't be able to capitalize in bull markets. So if the bull market has the potential of giving you 1,000% returns in your account, you're only going to make 20 or 30%, which might seem like progress to you, but that's not good enough because the potential was there for a much bigger return. You just didn't know how to capitalize on it. More importantly, when a bear market comes, you're going to have a big drawdown. You're not going to know how to protect yourself from the downside of a bear market. And so whatever little returns you make in a bull market, you're going to end up giving it all back. Overall, your account is going to go nowhere. And in fact, most traders end up losing all their capital eventually. This is what their equity curve might look like. They make a little bit in the bull markets, give back most of it in a bear market, if not all of it in the bear market. And this is the best case scenario for someone who doesn't work hard. The worst case scenario is their account goes straight to zero and they blow it all up in one trade or a series of bad trades. Now, with hard work, on the other hand, you will capitalize bigly in the bull markets. Think about Oliver Kell or Kristen Kulamagi, who in the 2020 bull market, when the market gave the best opportunity in the recent generations, were able to make 1,000% in their accounts. Now, this did not happen by luck or by chance. They had been working hard for the past several years, were fully prepared to capitalize on that opportunity, and were able to move their accounts in really meaningful ways when that opportunity presented itself. More importantly, if you're someone who has worked hard and knows how to manage their risk, you're going to have very small drawdowns in bear markets. Overall, the account just goes up steadily. And this is exactly what your equity curve looks like when you're a trader who's worked hard. So what is the conclusion? Hard work is a necessary but not sufficient condition for success in trading. For those of you who don't come from a scientific background and this just sounds like a lot of gibberish or semantics, think of it this way. It is necessary for you to work hard if you want to succeed in trading. But just working hard is not sufficient. Only by working hard, you're not going to guarantee success. But if you don't work hard, I can guarantee you failure. That's the bottom line. I hope this has been helpful. Do let me know in the comments if it is. Thank you.